Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, tech investors spooked by another scary prediction of AI ravaging the economy. And then an actual mass layoff thanks to AI. What is the future of the Mag 7? We begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Megan Leonard, Al Root, and Andrew Barry. So Megan, a piece of fiction spooked the market on Monday, and then people said, nah, that's not really going to happen. The market rallied, and then on Friday, oh, it actually happened, and we had a bad inflation number, and the market went down again.
Yeah, we had a lot of news this week, and none of it really good for markets in many respects. So yes, the Citrini report that everyone is talking about, it definitely had those 1980 vibes, and it was not good. It certainly did scare the market. We did get some recovery from that, and then we had the wholesale inflation report on Friday. We had the block layoffs, and so all of that, not good. We actually ended the week down.
Yeah, I mean, it's interesting that despite the higher than expected wholesale price increase of 0.5% in the latest month, the Treasury market has continued its rally recently, and you actually saw the 10-year Treasury note dip below 4%.
So this is the PPI that Andrew's talking about. Yeah. It's kind of a forward-looking indicator, right, Megan? It's not a backwards-looking thing.
It is. So this is the producer price index. This is wholesale inflation. This is the prices that your companies are paying for the input costs, the raw materials, if you will. And so it is one of those situations where this flows through to the consumer prices. And this month, the last month for January, we got a 0.5% increase. That doesn't sound like a lot month on month, but it was definitely hotter than we were expecting. And this has been a number of months now that we've had these hotter inflation reports on this wholesale inflation. That doesn't bode well long term.
It's always important. One number does not mean a big deal, but if it's part of a trend, that could be concerning. How does this change the outlook? Does it change the outlook for rate cuts?
Well, we are never expecting a huge rate cut in the March meeting that's coming up, but it does keep pushing back those rate cuts going forward. And you do have to remember that we did have an expectation that the incoming Fed chair for Kevin Warsh was going to maybe kickstart those rates. I think he's coming in, even if he does want to do that, with a very hawkish, panel that he's got to convince. This environment very, very difficult.
And then very important number to coming next week. I know you've been watching the jobs report. What are you expecting?
I do think that the jobs report is going to be the report to watch this next week. We're having an interesting setting for this. Now, we had that huge soaring number in January. Don't expect that for the upcoming report for February.
Which is kind of funny to say 165 is huge soaring, but as of late it has been.
Right. Well, 130 was what we had. So now we're going to get about 65,000 payrolls if the estimates are correct. Unemployment, though, probably remaining right around 4.3%. And keep in mind, too, that we've also got those retail earnings next week. So we've got Costco, Target, a lot of those retail reports coming out. That'll be an interesting mark on the consumer spending that we've been so interested in.
And thanks for correcting me on that number. I think 165 was expected. Andrew, we just had a Barron's Alternative Conference. The number one conversation was this AI scare in the markets. And then the software companies came in with pretty good earnings. I think that delayed the SaaSpocalypse for a day or two. What do you think?
Yeah, I mean, software's been a big loser from the concerns about how AI may disrupt different industries. You saw a reprieve this past week. The main software index, I think a ticker IGV, was up about 2%, but it's still down 20% for the year and down about 30% from its high last fall. You got news from Salesforce, some earnings, which reviewed somewhat favorably. Its stock up about 6 or 7%. But two other software companies saw their stocks fall after earnings, Zscaler and Snowflake. So I think the concerns and the worries are still very much out there.
And then you've always been talking about this issue of how the accounting at software companies, you don't like it. Is that part of this? Al says don't worry about it.
Well, I think, the software companies basically add back significant stock-based compensation to come up with a non-GAAP earnings number. I think that overstates their earnings significantly. Some of these companies are not profitable on a GAAP basis. And it's interesting, you saw NVIDIA is going to basically stop using a non-GAAP number that excludes stock-based comp starting this year.
Yeah, we have lovely conversations about this occasionally. I just always think that I'm not smarter than the market. We all know about stock-based compensation. It's absolutely. And what I don't like to do is when there is a clear catalyst like AI, don't start to say, well, it's kind of like on the others, these real stocks, Caterpillar and Honeywell are soaring. We shouldn't make up stories about how good they are. It's just a rotation out of software.
So, Al, you got to realize, though, that Andrew is smarter than the market?
Well, actually, that's true. Actually, you know what, Jack? I concede the point.
Okay, let's move on to GLP-1 stocks. You've been watching that, where Novo, Nordisk, and Eli Lilly are in this two-horse race, and Eli continues to win.
Yeah, and thanks to Novo Nordisk shooting itself in the foot, right? The big news this week was they had a head-to-head trial. Lilly's Zepbound against Novo's Cariggisima. I probably said that wrong. Really impressive numbers. Over 52 weeks on the Novo drug, people lost 23% of their body weight, but on the Lilly drug, lost 25.5% of their body weight. So Novo stock went down, and Lilly said thanks for the help, but that stock really wasn't up because pricing for these drugs is coming down for a whole variety of reasons. And then there's more competition from Roche. So this is the biggest portion of the healthcare market and the drug market right now, but there's sort of, it's almost like the AI thing. Everybody's sort of like, I don't know what's next.
Yeah, I'm surprised at that market reaction. It feels like margin of error to me.
I mean, Novo stock is worth a look, I think, from value-oriented investors. It's come under a lot of pressure. It's down about 60-70% from its highs, trading for under 15 times earnings now.
Alrighty.
And Lilly trades for 30.
Yeah, that's the big spread.